All right. Welcome, everyone, to this webinar on illicit finance, a transatlantic challenge. We've got a great panel of guests here, and I think you're in for a really stimulating and insightful discussion on this critical issue at a really important time for the issue of illicit finance flows in Western democracies. I think before we kick off, just a couple of notes. The first is that, unfortunately, Deputy Assistant Secretary Scott Rembrandt is running a bit late, so he'll only be able to join us in around 30 minutes, hopefully, and then he'll be able to join and contribute to the discussions, but apologies for that. Unfortunately, there was some unavoidable delays. Otherwise, if you have any of the participants have questions, I would really encourage you to use the Q&A function. And please do start sending those questions in as early as you have them. And once we've gone through the opening statements by the panelists, I'll be reading them out, or if you would rather ask them yourself, indicate that, and the technical assistants can direct you. We'll put you up on the webinar screen. So welcome, everyone. We're here to discuss illicit finance, which is a really serious threat to Western democracies, and it's truly a transatlantic challenge in how it operates. Illicit finance flows go through correspondent banks in New York, bank branches in Europe. They are registered to offshore jurisdictions, and they often end up in New York or London real estate. These illicit finance flows enable corruption, drug trafficking, terrorism finance, that destabilize our neighbors, our allies, undermine our foreign policy goals. And we're increasingly finding constitute a threat to our own democratic societies and systems through their corrupting influence. And there's been a spate of scandals over the last few years over how our financial systems have enabled these finance flows, whether it's the Panama Papers leaks or the Danske Bank scandal. But in the last few months and years, a real political momentum has developed to try and tackle some of our failings in these areas. The new US administration, or rather the US Congress, recently enacted the Corporate Transparency Act. The new US administration has indicated that this will be one of their top priorities that they will try and incorporate into their foreign policy. And the EU is planning on putting forward proposals for a strengthened regulatory AML system over the next few months. And we have a great panel of guests here to discuss these issues. So we have Raluca Pruna, who's head of units of the European Commission dealing with AML and financial crimes. We have Lakshmi Kumar, who is policy director at Global Integrity, a think tank dedicated to these issues, and Ben Judah, senior associate in the Atlantic Council. So without further ado, I'd like to hand over to Raluca to open up the discussion.
Yes, thank you, Frederico, and thank you very much. Good afternoon, everyone, and thank you very much indeed for the opportunity to attend this policy dialogue on such an important topic. You said it already, this is coming, timely, because when it comes to what we do in the Commission, this would allow me to briefly present to you where we are in terms of defenses of the Union financial system to tackle dirty money and its misuse for money laundering and terrorist financing purposes. The topic, so AML CFT, the policy is high, as you know, on the agenda of the European Commission. And this is for several reasons. And first of all, allow me just to say a couple of words on the context of where we're coming from. And fact is that the last couple of years were difficult for the Union in the sense that we had, as you mentioned, difficult banks in difficult situations. They made the headlines, but not only this. So in July 2019, the Commission adopted a package, an AML package, that pointed at how exactly the system in the Union, the system to fight dirty money and terror financing, needs to be improved. The package took a very close look at the main weaknesses, and the main weaknesses are perhaps no surprise to anyone: fragmentation of our rules in the Union. As such, we have different member states transposing our legal instruments, which are a minimum harmonization, what we call, so directives. Member states transpose them and apply them differently, which is resulting in fragmentation at Union level. We have insufficient implementation of the rules as they currently stand, and we have a fragmented supervisory architecture that led, unfortunately, to insufficient coordination and cooperation and insufficient exchange of information, particularly in cross-border cases, as it is in fact the case for most financial crime. So we acknowledge that. We are of the view that criminals, they have a very good way. They're always ahead of policymakers, and they have a very good way of exploiting weaknesses, especially now in the current pandemic crisis. And in order to address this, the Commission tabled last year, based on, as I said, on findings of the ML package of July 2019. In May last year, the Commission adopted an action plan which sets a political agenda, which is ambitious in our view. The goal being to turn the page and to strengthen the AML system, so that to ensure that we protect our economy and our financial system in an adequate way from criminal infiltration and criminal money. And at the end of the day, that we ensure for our citizens' security. The action plan, as I just said, we are of the view that it is ambitious. It builds on several pillars with the view to bring a comprehensive AML policy, AML CFT policy at Union level. So I will quickly go through what was announced in the action plan and what we have done in the last year. But before that, I would like to say that at Union level, we are, as you also said, Frederico, we are witnessing an unprecedented, if I may, political momentum in which we have, and our co-legislators, so the Council, Member States and Parliament, but also stakeholders, largely aligned that not only that we have to do something, but on what needs to be done. Along with the adoption of the action plan last year, we have launched a wide, on the same day in May, on the 7th of May last year, a wide public consultation. We consulted the public at large, but also national competent authorities in the member states through a more targeted consultation. And this is what encourages us to believe, seeing the numerous responses that we have received, that we can speak of a large alignment. So now we are in the final phases before the adoption, based on all this work that was previously done. We are in the final stages of tabling an AML package whose adoption is foreseen around mid-May. And the legislative package will will have three main elements that I have mentioned already. So first of all, we have the first big strand of work is, deliverable, is on the introduction of stronger rules. This will allow the Union to move away from the fragmentation that I mentioned, and to ensure that the same safeguards apply everywhere in the Union, because, you know, our system will be as strong as our weakest link. There are a number of areas in the current directive that we believe merit to feature in the first AML regulation. We have, as you know, a series of directives that proved very good, but they have proved their limit as well. So a number of areas will feature in the first AML regulation, and just to briefly mention them, it's about the list of obliged entities, requirements for customer due diligence, sanctions, and these new rules will allow to integrate into the Union framework the latest updates that we have seen in the work of the FATF, where we do stand as a fully fledged member. So just to give an example on virtual assets and virtual asset service providers. A second building block in this legislative package is obviously on introducing an EU-level supervision, EU supervisor, to ensure that the application of the rules is overseen consistently across borders. Now, the action plan of May last year left open, because the public consultation was also ongoing. It left open the powers and the scope of the supervisor. Now, after the consultation, we have a very good idea of what this will cover. And we are of the view that the EU supervisor should have within its scope not only the financial system, but also the non-financial system, not in the same way. I mean, we're not speaking about direct supervision for the myriad of financial and non-financial actors, but of direct supervision for a limited number of the riskiest institutions in our financial system, indirect for the rest, and the coordination role for DNFBPs and for non-financial actors. And last but not least, the third building block is about the financial intelligence units. As you know, a report that was published in July 2019 pointed at a lot of room of improvement in this field as well. And this is why, as announced in the action plan, the intention is to provide for a mechanism to support and coordinate the work of financial intelligence units in the European Union. And this mechanism will be entrusted with providing sufficient tools, not only in terms of technology, but also in terms of support for the analytical work. So basically, what we want to do is to make certain that joint financial analysis is possible to, as I said, to address a cross-border financial crime with the appropriate tools. This reform so the reforms that will be part of the AML forthcoming legal package is not occurring in isolation. In the same time, the Commission takes a very strong view on the need to focus on enforcement of rules as they currently stand, and this is as well a priority for the Commission. This is summarizing in brief the ambition of the Commission to address the weakest spots in the AML CFT framework as it currently stands. Because I spoke about the fact that we do not work in isolation, what I presented here today, the forthcoming AML CFT system, is just an important part, but just a part from a bigger picture that the Commission is considering. There are other services in the Commission, in particular DG Home, working on a revised strategy to combat organized crime and corruption. And this package will be tabled in April this year. So this would be in a nutshell where we are, where we stand, and I would stop here, and I'm looking forward for the policy discussion. Thank you.
Thank you, Raluca. That was a great, concise summary of the Commission's upcoming proposals, and it's really heartening to see that that these reforms are happening. I'll turn over to Lakshmi, but I will come back to you, Raluca, because I do have a few follow-up questions, particularly around the supervisor.
Thank you, Frederico, and thank you, Raluca, for those excellent remarks. I think it provides a great way to sort of lead into some of the remarks that I wanted to make myself. I think, as we sort of step into this, I think it's important to acknowledge, one, that the realm of policymaking, when we talk about illicit financial flows, is deeply embedded to how the US and, sort of this transatlantic relationship, because the EU's efforts have been the forerunner and the leader in terms of setting the standard for how we look at the policy making around illicit financial flows, and where really it's sort of an indication of where the next challenges lie and where the next efforts need to be made. Having said that, at the same time, I think it's also important to recognize, given the size of their economies, and using sort of a UNODC rough calculation on this, we are looking at the scale of money laundering being anywhere around over $1 trillion in the US and close to $1 trillion in the EU. And so while we see both sides of this relationship being critical and instrumental to making policy change, it's also, I think, important to acknowledge that for the world of illicit financial flows, for criminal actors, for kleptocratic regimes, authoritarian governments, very often it is the EU and the US that also serve as the home for their illicit financial flows. And you can't uncouple that relationship where they are both leaders, but at also the same time they're the recipients of a lot of this money, because they are leaders and they're considered as financial centers, and they have the protection that stable currency, the protection that a stable currency provides, along with the fact that the reputational advantage that can be seen from associating through a legal entity or an operation that moves through the US and the EU. And it's important to note that, because I think it goes to sort of the larger discourse we have within the international space, which is, if you look at the Financial Action Task Force evaluations, because consistently year on year, you will see that governments, jurisdictions that have some of the highest approval rankings, the best mutual evaluation scores, also tend to, there does not seem to be a correlation in terms of how it affects the movement of illicit financial flows to these countries. And I think, just at the outset, it provides us both room to think, not just because there is no question in terms of the strength of the laws and in terms of the strength of the democratic institutions, but it really leaves us a question in terms of how are we carrying out assessments? What is it that we can still do better? Because, Luanda Leaks is an excellent example. It moved all its money into Portugal. The UK is now has left is leaving the EU, has left the EU, and so, but the UK is one of the best scores, had one of the best scores with the Financial Action Task Force, and still you see these problems. So I think it's important to acknowledge that. Second, I think conceptually, I think while we are here and we speak of this as a transatlantic relationship, I think it's interesting to note that this panel is called Panel on Illicit Finance. And as we speak right now, the UN FACTI panel is currently ongoing, which is debating the issue of whether we should call this illicit finance or illicit financial flows. And conceptually, there is a transatlantic divide there, with the EU often using the word illicit financial flows, and on the US, the accepted terminology is illicit finance. So as we see this as a geopolitical threat, I think it's important that we acknowledge that some of it is at an international level. I think, are still working through some foundational concepts that need to be addressed. Sort of moving on from there, I think, because one of the things we wanted to think about is the changing role of illicit financial flows. And I think critical to that, as we talk about an approach to sort of internationally looking at this issue, is looking at essentially, because AML policy is a tool of foreign policy, but at the same time, we also see that corruption is also a tool of statecraft and foreign policy. The influence of sort of, Russia within the Ukraine, Armenia, using sort of extractive governance dependence to further, in a sense, corrupt policies, but at the same time is really a measure of the changing and evolving way of illicit financials. I think the same can be said and the same can be said of sort of, in the US, when you look at the activities of Paul Manafort in terms of lobbying for essentially war criminals in the African continent and the impact it's had, because all of it at the end of the day, the ability to influence foreign policy means it's the ability to make more money, especially when you're talking about sort of kleptocratic actors. And I think as we talk about clear-cut AML policies and policies around illicit financial flows, I think the one thing that we should not separate as we think of the future of policy making is how the political realities that govern us often can shape how we think about illicit finance as a tool. And I think that's something that I think this discussion should lead into. The three other things I would quickly want to touch upon, because I promised Frederico that I would stick to my 8 to 10 minute slot, and I am, if anything, I'm strident about keeping time on these things, which is the sort of the touchstone of illicit financial flow architecture has been the implementation of beneficial ownership, because it is what buttresses everything else, and this ability to know who the natural or the natural person or individual behind monetary transactions provides us incredible tools. Now, with the 5th EU AML directive, there have been sweeping changes, but even going back as last year, what we do see is that implementation of the registers, interconnectivity of the registers, it's been patchy and problematic. The US just last year, we sort of passed our beneficial ownership legislation. There's a talk of the implementation of the register. But I think what we're really seeing is that as we talk about this, I think 3 days ago, you had a new report which came out, which shows Luxembourg, which is, after the US, is the largest place for sort of private investment funds. Essentially, the industry, the vast majority of it, you're unable to trace the beneficial owner. And if you do a cross-reference with what's going on with the same funds that operate in the US, there is a mismatch in information. So this, I think, largely goes to speak about sort of the registers that we are seeming to create. One is not just accessibility within the EU, within member states, accessibility not just for a transatlantic relationship, but really, I think the need to talk about accessibility from an international perspective, because having a register that is more broadly accessible makes it easier to actually enforce better mutual cooperation. And I think one of the things that Raluca touched upon was talking about sort of, the fragmentation. And I think the report did talk about sort of how even within the EU FIUs, there's been a problem with communication and exchange of information. Both the EU governments in the US are all part of the Egmont group, which is meant to actually facilitate greater communication within the FIUs. What we are seeing, and if you look at sort of some of the problems that we're seeing with mutual legal assistance treaties, is that we are still very far off from actually achieving cooperation. And so I think, the international cooperation piece is important. The last thing to touch on is the impact that sort of illicit financial policy has on the rest of the world. And I think a big thing in this to consider is de-risking. Last year, EU banks, which are the major providers of trade finance to most of the developing world, in fact, de-risked from trade finance. And so you're now essentially looking at over $1 trillion in trade finance gap, where essentially businesses have no access. You're also seeing the cutting off, 2015, 2016, you saw the height of correspondent banking relationships being de-risked. That has not changed. 30% of banks surveyed in different parts of the world all don't have. And so what all of this means is that the inability to access money and finance through the formal financial system sees the movement of it elsewhere. Money never leaves. It just is the question of where it goes. And I think sort of the impacts of what we see, or the knock-on consequences of AML policy, is also sort of critical to consider. There's certainly more I'd like to touch on, but I think these are sort of the broad strokes that I wanted to sort of, I think, frame the discussion around for sort of any further questions. So I'll pass it on back to Frederico to talk to Judah, Ben, about this.
Thank you, Lakshmi. That was really excellent. Some really good points, particularly, I think, around the issue of exchange of information and the actual implementation of these rules. And I think later on, I think it'd be really good to circle back on the issue you touched on essentially the collateral damage to the rest of the world of these de-risking initiatives. Ben, I'll hand it over to you now. You're on mute.
Thank you so much for having me here today. It's a real pleasure to speak at the EPC and with such an esteemed panel. I just wanted to thank Raluca and Lakshmi for their brilliant presentations framing the issue so well just now. I thought that I could maybe contribute some insight in trying to discuss the politics of illicit finance in the US and internationally from a US perspective over the last few years. So I thought we'd begin looking at the pre-Trump politics of illicit finance in Washington, then look at the Trump era politics of it, how it was transformed by the campaign in 2020, and then have a look at the vista of the Biden era of where we might be going and what possibilities and perspectives have now opened. So let's begin with the pre-Trump politics of illicit finance in Washington. It's important to say that this issue is being discussed by leading voices in academia and activism for much of the last 15 years, and a lot of the most important works and topics have been sort of released or brokered in in sort of academic and think tank discussion really for some time. But it was only in the last few years of Barack Obama in Washington that the foreign policy programs, that the parts of the Washington debate from which officials are circulating in and out of the White House or the State Department, depending on who's in power, began to see this as a major foreign policy issue and not simply an issue for financial specialists, for the compliance industry, or for the NGO sectors. And the triggers were the adventurist and aggressive foreign policy launched by Vladimir Putin, with vengeance in 2014 around the events in Ukraine. So that was when the discussion of illicit finance, corruption as a major foreign policy problem first began to be present in CSIS, in Brookings, not in a specialist group, but widely present in the debate. This is when the first questions began to be sort of asked about it in the commonly and frequently in foreign policy circles on the Hill. That was building up in the pre-Trump era, and there already was appetite in the Obama administration and in the Obama White House among certain actors to do something about it. There already were a lot of successful activist groups and programs that began to be set up in the Obama era, but seen from the White House, those working on legislative affairs never found that the issue of beneficial ownership and all of these adjacent issues to do with illicit finance, corruption, or money laundering were given the priority by the administration, were given the priority by Congress, or received real champions on the Hill to do anything about it. So in the run-up, to summarize, in the run-up to the Trump moment in American politics, we had a discussion. It was downriver from a discussion on Russia. It was becoming present in the major think tanks on the Hill, in that sort of world around the Senate Foreign Relations Committee or the House Foreign Relations Committee. There were proposals, there were activist groups, but it was not seen as a priority by the key senators or by the White House. The Trump era changes everything. Trump, through his own persona, his own links, the journalism around Trump, the investigations around Trump and his connections to Russia, all of this supercharged a discussion about illicit finance and Russia, and made it a major talking point for most Democrats in Washington. This turned the issue from priority number 30 to an issue very much in the top 15 priorities for Democrats in Washington during the period. And we began to see an interesting coalition emerge on Capitol Hill. The Trump events supercharged the various activist groups, think tank programs, coalitions that were focusing on this issue and trying to find solutions for the US. It gave them a real cause and a banner and an ability to kind of to explain their pitch and its urgency to the Democratic leadership and also elements of the Republican leadership. During this period on the Hill, an interesting coalition began to emerge between national security Republicans, very concerned about what this meant for Russian or Chinese threats to US national security, and the bulk of the Democratic Party concerned about corruption and electoral integrity and what it meant for the United States. So all the way through the Trump era, this kind of coalition slowly built up and expanded until the point in which one saw the NDAA, the National Defense Authorization Act, passed in the sort of final moments of the Trump administration after his electoral loss, of course, passing a lot of the key measures that had been called for. But this coalition between Democrats, Democrats and security Republicans also framed a lot of the discussion in Washington, framed a lot of the discussion in the media, framed how the issue went from being one at the fringes of the foreign policy debate in the Obama era to one at the end of the Trump era that I think was clearly one of the top 5 foreign policy issues being discussed in Washington. So now I'd like to look at the campaign. And how did the campaign in 2020 transform this into the politics that we have now? You know, just as a kind of brief overview for sort of European kind of friends and listeners who aren't in the US and aren't sort of paid professionally to sort of study US politics, but at the beginning of the 2020 campaign, there was a lot of uncertainty over who would be the Democratic nominee. There were lots of debates over debates over strategy, over what that Democratic nominee would need to look like, need to be, what kind of policies he would need to pitch. And there was a serious chance that it could have been either Bernie Sanders or Elizabeth Warren at various times in that campaign. Both Elizabeth Warren and Bernie Sanders, in different ways and with different stress points, made illicit finance and corruption a major part of their pitch to the Democratic primary voting electorate. You know, Elizabeth Warren drafted major policy work on how to kind of combat corruption at home and abroad. Bernie Sanders did likewise. Both of them began to try and advance this sort of revolution in thinking about what in the relationship between domestic and foreign policy, economic policy and foreign policy, which had been sort of hinted at by the debate in the Trump era, into a practical set of proposals. So by the end of the campaign, you know, both of these candidates and their policy units around them, their advisorial groups around them, had picked this issue as being of critical importance to them. You know, when I mentioned the coalition that had emerged in the Trump era, it's interesting, you know, we see Elizabeth Warren and Bernie Sanders coming at it from that Democratic perspective of these are issues facing the American state, American society, inequality, how can we fix it? But what's also interesting is that the Democratic side of that security establishment had also been very close to Joe Biden, and that Joe Biden himself, based on his previous experience as vice president, a sense he had that the United States under Obama didn't do enough about this issue, didn't do enough about Russia, and his own personal experience leading on diplomacy to do with Ukraine, Joe Biden had a series of Democratic national security kind of former staffers around him that pushed this idea as a priority. So at the end of the campaign, a coalition was ready to be made within the Democratic Party itself. Just a kind of brief note on Joe Biden. It's important not to confuse Biden's rhetoric, which can seem nostalgic, quite set in its ways, with Biden the politician. Biden the politician has always been a coalition builder who has put himself at the exact center of the party wherever it has been over the last few decades. And Joe Biden approached the Bernie Sanders sort of group, especially, and to a lesser extent that of Elizabeth Warren, with a sort of implicit proposal or a behind-the-scenes proposal that he would take on a lot of this corruption and illicit finance agenda, really make it a priority and bring on many of their people from both the Warren campaign and the Bernie campaign into his foreign policy team to really take action on this. In terms of what the other side of that would be, you know, this was an issue from the left, along with climate, that was really brought in and prioritized as part of Biden's coalition building. Areas that were dropped from their agenda might include, reassessing the relationship with Israel, or military aid, or like questions about the future of NATO or US hegemony. Those were very much dropped from what Biden brought on. So now here we are at the dawn of the Biden era. What vistas do we have for transatlantic cooperation? And what do these dynamics of American politics mean to us as Europeans, both in EU member states or not? So here are a couple of key points to go through. Biden has personally tied himself to this issue. Biden has made a series of statements saying that international kleptocracy and international corruption are some of his highest priorities. He said that he wants, at various times, he said he either wants NATO or American diplomacy or America's kind of major summits it plans to attend or host over the next year to do something about it. So Biden has made this a priority. Now let's have a look at the staff, always an absolutely crucial piece of the Washington jigsaw. His national security advisor, Jake Sullivan, has gone even further, saying that his loftiest ambition, I quote, is to rally the forces of democracies and partner countries with the United States to do something about illicit finance and corruption. And this is coming this is happening in the context of an administration with figures like Tony Blinken, a sort of bilingual French speaker, that are very enthusiastic about cooperating with the EU and want to see a united front with Europe. So it's a complete shift from the dawn of the Trump administration, where you had officials like Steve Bannon talking about their desire to break up the European Union. So let's have a look at what this year of opportunity could look like for American foreign policy in the issue of illicit finance. We have a series of summits where this can be either pushed by people in the US system or outside the US to make it a priority. The first is the G7, which the UK is putting a lot of diplomatic capital into and investing heavily into. The G7's got a lot of very interesting proposals, including floated Open Societies Charter. I think that's a very interesting space for democratic allies to work out how corruption could be an element.
Sorry to interrupt. If I could just ask you to wrap up in sort of the next minute or so, then
sure,
we can...
That's fine. So, and we've got the G20 will also, G20's leader discussions will also be a kind of an important sort of zone for this. And finally, the Summit for Democracy, which the Biden administration plans to host, will be an important venue for a big corruption component. So I think that there's a lot of promise this year, and I think that it's up to European allies and partners to propose things to the Biden administration and not just wait for a policy prescription to come down from Washington.
Thanks, Ben. That was a great summary of how we've arrived at this sort of very fortuitous political moment in combating illicit financing. Let me jump off straight from there and go to and take that question. What is it that we need to do to work together? When we say that there needs to be transatlantic cooperation to tackle money laundering, how exactly does that look like? What are the concrete steps that will enable EU authorities and American authorities to work together better to actually tackle these issues? Regulatory gaps, data sharing, or whether it's just a question of resourcing. I'll just hand over to Raluca to address that first, and then to Lakshmi.
Yes, thank you for the question. In fact, I've missed in my brief introduction, in my brief presentation, to say that we work very, very closely, obviously, with our American counterparts. And the first place is the Financial Action Task Force. So we are aligned there on several issues. Lakshmi mentioned BO. This is an example. As you know, work is ongoing now for the revision of Recommendation 24 on beneficial ownership information. I'm just giving this as an example. Apart from that, we are in a regular dialogue with our counterparts across the Atlantic. I mean, this is something that is obvious to all, that we share the same agenda when it comes to strengthening AML CFT defenses. I would stop here.
Thank you, Raluca. And Lakshmi, over to you.
So thank you. I think, one of the things I didn't get to touch on is, and I think, because Raluca mentioned the Financial Action Task Force, this transatlantic relationship, I said, is the ability to set where international policy making goes. And I think at the end of last year, we saw the Financial Action Task Force finally take a huge step forward and actually try and make sense of the issue of trade-based money laundering, which is in itself a very separate and distinct beast from money laundering, because it works through trade channels. The frontline agencies tend to be customs departments and sort of, the intermediaries that act through them, and not just financial institutions. And so the one thing I found interesting is that the largest trade relationship is the US-EU trade relationship, amounting to close to around $800 billion. What to me was, I think, surprisingly interesting is that the US has what it calls trade transparency units, where it essentially exchanges information. And there are pros and cons to talk about, the success of these measures and how useful they've been in actually targeting illicit finance through trade channels. What to me is interesting is that there aren't these dedicated units to facilitate direct one-to-one exchange information with any country in the EU, which I think is significant, and I think is an important path forward, especially if we want to talk about new challenges, new ways that criminals, terrorists, corrupt actors, governments are using trade to essentially move money, influence statecraft, influence foreign policy. And so I think that's something I'd see as the next step forward for both.
Thanks. And I want to pick up on that data point specifically, because it strikes me that whenever we talk about tackling illicit finance, the question of data adequacy, data veracity, and data transfer seem to be really key. Whether it's to do with the beneficial ownership issue that you highlighted earlier, or whether it's to do with trade finance. And Raluca, you mentioned earlier that there are issues even within the union for different FIUs to adequately communicate with each other. You mentioned some of the proposals in your upcoming, or that your upcoming proposals would try and tackle this issue of information sharing. I was wondering if you could perhaps talk a little bit more about that issue. I see that we have, I see our other guest has managed to join from the Fatca plenary. Hello, Scott, welcome. Glad to have you.
Thank you very much. I apologize for joining so late. I think, as you may have noted, the Financial Action Task Force is meeting virtually and it ran a bit late. Still actually going on, but so my apologies.
No worries at all. So I think rather than continuing my thought in that question, I thought, would it be perhaps best to give you some moments to lay out your thoughts on illicit finance and the transatlantic relationship? Although I don't want to dump you right into it after having finished the meeting and coming in halfway through. But if you'd like, we can give you some space to talk through those issues.
Sure. Could I ask how much time would you recommend I speak for? Just I don't want to interrupt the flow.
Maybe sort of 5-ish minutes would be good.
Sure. So thanks so much for inviting us. My name is Scott Rembrandt, and I'm Deputy Assistant Secretary in Treasury's Office of Terrorist Financing and Financial Crimes. I think many of you are aware of the Treasury Department's role in combating illicit finance. We have a larger Office of Terrorism and Financial Intelligence called TFI, and so there's 5 components. We're one of them. And we're the office in charge of coordinating AML CFT policy for Treasury and the US government. I think everyone who's probably watching this saw or has read President Biden's remarks of last week, reiterating how important the transatlantic alliance is and how committed we are to what we view as a cornerstone of our partnership with Europe and confronting a lot of 21st century challenges. And so I won't restate that. I would just say that there's a number of priorities that I expect to have a significant focus of my department on in the coming few years. One is combating corruption. We recognize that corruption is a key national security threat to the United States and international partners, and undermines abilities to take care of their people and erodes legal, moral, and ethical fabric of society, and corrupt officials prioritize their own enrichment over their own citizens. And Treasury, led by our larger departments in the last several years, taken a number of steps to hold corrupt actors accountable, and we've designated to date about 240 corrupt actors or serious human rights advisors under global Magnitsky authorities, including some offshore companies that facilitated corrupt deals with senior foreign political figures. And we certainly commend the EU's adoption of human rights sanctions regime in 2020, but we would encourage our EU partners to consider including corruption as a sort of sanctionable offense under the same authorities. Second big priority, there's a lot of priorities, obviously, but from a systemic perspective, I think there is and will continue to be a great deal of focus related to combating domestic violent extremists. This is a common challenge that we all face. What happened in the Capitol on January 6th sort of highlighted to the world the extent of the problem, but it's not unique to the United States. And we know our partners in Europe also are focusing on similar challenges, and something we can work more closely together with. The challenge is compounded by the growing transnational links between these groups and individuals in the US, Canada, and Europe, Russia, Australia. And they've been able to leverage the internet and social media to share propaganda, recruit ideologically aligned supporters, forge financial links, and possibly collaborate in specialized training. And we focus very intently at the Treasury Department, how they are funding themselves, how they move funds, what we can do about it. I think this will be a common challenge and hopefully a common area that we can work together on, including related to using new ways to share information and to interdict this type of financing. Third big issue from a systemic perspective I wanted to highlight relates to cyber, ransomware, and election security. We're very focused on these issues, particularly ransomware and cyber attacks, which have only increased during COVID time, and the rising use of online platforms, as well as I mentioned, some electoral security issues that are obvious both to us and to challenge the stability of not only our democracy, but many democracies in Europe as well that have faced similar attacks. I think hopefully all of you saw from last year that the G7 put out a pretty vigorous statement related to ransomware and how ransomware attacks are only increasing, becoming more sophisticated, and are being used against not only US, but also European partners, hospitals, financial institutions, and other critical infrastructure. And there's more that we need to do on that front. Another big systemic priority is innovation. For those of you that did not see it in the last 2 weeks, Secretary Yellen spoke at a non-public innovation roundtable, which focused on how financial technology both can facilitate financial inclusion, facilitate cross-border payments, make those payments more secure, preserve privacy, and combat financial crime. So both from our department and across Treasury and the US government, I expect a lot of focus on financial inclusion and financial transparency efforts. A couple other big hits. Information sharing is something that's going to get a lot of attention. I anticipate free movement of data is critical to the future of the digital economy. And I think sort of data protection and privacy obligations are very important, but they should not prevent financial institutions from implementing effective AML CFT policies and procedures. And I think there's increasing attention here, certainly to GDPR and also the European Data Protection Board and other DPA authorities clarifying guidance and enforcing GDPR, and also European Court of Justice issued decisions interpreting it. I think we would urge our European partners to achieve a unified, clear understanding what information can be shared, when, and with whom, and that this understanding give due consideration to member states' important law enforcement and national security interests, as well as our own. So we see AML, CFT, and data privacy and protection as both very significant policy interests, but they're not mutually exclusive. We're giving a lot of attention to improvements in supervision. The FATF is working to finalize a risk-based sort of guidance paper related to supervision. We're very interested in efforts in Europe to strengthen and centralize to some degree AML CFT supervision. And lastly, there's a lot of work, common work, both at the FATF and elsewhere on digital assets and innovation that we are very interested in pursuing. So those are sort of the high level, I think, systemic issues we are most focused on as relates to combating illicit finance. And we really look forward to working with our EU-based partners on that. Thanks. And sorry again to be late.
No worries, Scott. Thank you. That was great. And in fact, you kind of anticipated the question I was about to ask, which was exactly on that issue of data exchange, data adequacy, and various bottlenecks that exist for transferring data amongst institutions for AML purposes. Raluca, I don't know if you'd like to take a moment to address that question and any of the wider points that Scott made on the EU-US relationship.
Yes, thank you, Frederico. I would just mention a point that Scott made and that was discussed also in the bilateral exchanges that we have with our American counterparts, data protection and the GDPR and the regime that we're having in Europe. It is the case that in the action plan adopted last year in May, we mentioned this issue and we said that given the, let's say, arrangements on data protection at union level, we will turn to the EDPB, which is the special structure where we have all the data protection supervisors in member states sitting for them to issue guidance so that indeed all misunderstanding is clarified, because we cannot share more the idea that while both the policies and GDPR requirements in the Union and the AML CFT, their high political priorities, they cannot be mutually exclusive. And we have heard also in our public consultation ahead of tabling this AML package in May this year, that this needs to be clarified. We're working on that. And then if you allow me, on the exchange of data and the exchange of information in general, we acknowledge the fact that we need not only in the Union, but I can speak about what we do for what our intention is for the Union. We see, especially in this pandemic crisis, that financial intelligence units in different member states, they do face the same challenges. And the intention that we're having with the forthcoming mechanism is to provide a forum in which, common typologies and trends and modi operandi can be shared, so that to avoid application. And again, as I said in my introductory remarks, to make certain that we address cross-border crime, because financial crime is a cross-border crime, with the appropriate tools.
Thank you, Raluca. Sort of going further into this issue of how to process this information, one of the main problems that FIUs face is the huge amount of information that comes through suspicion activity reports and other types of information flows relative to their relatively meager resources to deal with all of this. How can we best try and tackle this? Is this purely a resourcing issue? And if so, do the EU proposals envisage, as well as providing a forum for information sharing, augmenting the resources available to deal with this flow of information? Or is there something fundamentally almost broken with the model, that there needs to be another way, perhaps something more on the front line of financial institutions and the risk-based approaches they take to suspicious activity reports and stopping transfers of money? Or is it a resourcing issue? I'd be keen to hear your thoughts on that, and also yours, Scott. Sorry, Raluca?
Yes, I thought that Scott wanted to take the floor, so I'll leave him first.
No, I'm having some challenges with my computer, so forgive me. I think it's really for Raluca and others in Europe to comment on FIUs in Europe. I think we're following with great interest efforts to sort of strengthen their cooperation, strengthen their ability to share information. But in terms of individual FIUs or the resourcing constraints, that's something I think better addressed by Raluca. I would just say from the US perspective, we think that financial intelligence units and having effective FIUs and effective information sharing to the financial sector from the government is essential. I think we've been quite fortunate in the US. Since 9/11, we've had something called 314 of the Patriot Act, which allows more real-time information sharing with financial institutions and provides them a safe harbor when they receive this information, and provides them with some safe harbor when they share information that they may believe be linked to terrorist financing and money laundering with one another. So there's other countries, including that in Europe, are looking at better ways to share information with their financial institutions, and with their financial institutions, we find this is a very valuable tool. Everything that we can do via Egmont or the FATF to sort of strengthen FATF FIU cooperation, we're all for it.
I think, Frederico, that you've mentioned, you've put the finger on a very valid point. And in the discussions that we had, and with FIUs and with the obliged entities that are submitting suspicious transaction reports to FIUs, it depends whom you're talking to. So if you talk to FIUs, they would say that, obliged entities, they take a very cautious approach in which they prefer to submit to the FIU everything, so that they're not caught, not being diligent. If you speak to obliged entities, they say, we report to the FIUs, and it's not the case that we timely hear back from FIUs on whether what we have reported as a suspicious transaction, it was of any use, and so on. So this is a field that was part of our reflection before tabling this proposal. We do not think that the reply lies into increasing resources. We take a look at this because there is already in the legislation as it currently stands an obligation for member states to adequately staff their FIUs. But we think that before moving into, a mere increase of staff, a more effective use of the resources in all FIUs could be achieved. And this is the ambition that we are having with this mechanism, to pull together resources so that, by increasing cooperation, we ensure that different FIUs in different member states, they're not working on the different identical or suspicious transaction reports that concern the same parties. So this is something that we work on, and again, the ambition is to deliver on this. We're discussing with FIUs in different in the union in different fora about this, and I would stop here. So this is a problem that we have acknowledged and that we work on. I would not stop before saying that this is not unique to the European Union, to FIUs in the Union, but this is something that is experienced, unfortunately, by financial intelligence units elsewhere, and it's a common problem, I would say.
Thank you, Raluca. I don't know if either Lakshmi or Ben would also like to come in on this question.
Yeah, I just had something quick that I wanted to sort of touch upon, is that, the FinCEN, which is, the US's financial intelligence unit, it is the world's most requested FIU. And, one of sort of the big hurdles to being the ability to provide information for long has been the absence of, beneficial ownership, the absence of a beneficial ownership registry or a national beneficial ownership law, a federal level beneficial ownership law within the US. And I think, the one thing that perhaps is hopeful is with the creation of a registry, some of that can be remedied. But if we're talking about information sharing, I think the one thing that which I think we keep running into, and I think it's something that the EU's report, as I mentioned at the start of my introductory remarks, mentioned, is that coordination, even with the presence of the Egmont group, which is a collection of international FIUs, coordination even within the union has been a problem. And then it can only be expected, therefore, that coordination within the Egmont group is a problem. And when you sort of take this and look at the fact that year on year, the anti-money laundering sort of, SAR submission filing industry is well over $1 billion. And we are looking at capturing only 1 to 2% of that. One of the things that maybe sort of to, I think through, irrespective of how we consider resource sharing, is better integration of systems. And that's something that are lessons that have been learned from the beneficial ownership registries and other sort of, SAR filing mechanisms across the world, is that the registries have very little value on its own. They have significantly greater value when they are connected to a much larger whole of government approach, which looks together and fuses together multiple data systems, sometimes even motor vehicle data systems that can actually detect trends and patterns. And I think the one thing to consider when you talk about information sharing is not just information sharing between financial institutions and the FIU, but it is the FIU and other government agencies within the country, something that we keep running into. And I think this is broadly true of a whole host of jurisdictions, is when you talk about risk assessment, you will often find there are certain government agencies that are not always as involved. Very often sort of customs takes a big role and they aren't involved with certain money laundering threats. And so I think thinking through the pieces of where the communication gaps lie, or where there is better coordination, is not just information sharing through a cross-border mechanism, through the government institution or the private sector, but more importantly, I think thinking through how the pieces within a government can function are just as critical. So it's a 3-layered information sharing process that I think which is how we should frame it. And so I think that would be sort of how I'd want us to think about the issue.
Thank you, Lakshmi. And that certainly links to something you said earlier, Raluca, about the links with the work that DG Home is doing. I don't know if any of you would like to respond on that or have any kind of further points on this issue that you'd like to raise.
I'd just like to kind of make a few points really, which is, we've had a great conversation about the problems we face in the technical sense and about like trying to work out where the blockages are. But, if we were going to think of what are the key ambitious political goals that we should set ourselves as transatlantic partners during the Biden administration, what could they be? Like, what would be those points that we would want to see EU, UK, and US leaders agreeing to? So I'd like to run down a few of those, if possible. I think the first one is that we need to agree a common set of anti-money laundering and anti-corruption standards between us, and hopefully being at the core of a group of democracies, perhaps under the aegis of a global kleptocracy initiative, that surpass current best practices. The second thing we need to do is that we need to pledge, as members of that global kleptocracy initiative, as members of that alliance of transatlantic alliance or kind of partnership of democracies, to adequately resource institutions and strengthen enforcement of laws and regulations designed to prevent illicit finance and corruption. Then, especially after this kind of wonderful discussion we've had on the issues to do with FIUs and registries, there needs to be an international agreement and in that transatlantic frame, in that alliance or partnership of democracies frame, to automate and reduce barriers to information sharing relating to suspicious transactions. This is something that we need to get commitment from the top down on. What could that look like in more detail? Something that I'm very interested in is increasing access to Fatca and CRS data. I think that could have a very beneficial effect for us. And then I think we also need international agreement that corruption-related financial crimes are not deprioritized relative to terrorism and narcotics, something which I believe has been a flaw in the US system over the previous few years. There is definitely room to be taken to promote harmonized use of coercive economic tools. These could be Magnitsky sanctions or various other sanctions, or towards financial entities or individuals. You know, these things are stronger when they are done in an allied transatlantic format. One thing that I think is very important in the current context of the conversation about the China challenge is to align foreign investment screening standards to cover kleptocracy and corruption. You know, there is the construction of foreign investment screening standards, you know, primarily to deal with issues arising from China on across Europe, across the transatlantic alliance right now. And I think that we can try and harmonize those in order to promote action on corruption and illicit finance. Now, what about how we're finding out about corruption in the first place? You know, one thing I think that's very important is to provide whistleblower protections and incentives in cross-border corruption cases. It would be terrific to have agreement between the EU, the US, the UK, and the world's leading democracies on this issue. Another point which I'm very committed to is ending visa schemes across the alliance that permit abuse by corrupt actors. Now, I have two final points, and then I'm going to two final points just to end this little set of issues for us. You know, one thing which I think needs to be done in a coordinated manner is to elevate the role of anti-corruption aims within national security planning and intelligence collections, you know, across the transatlantic community. And I think that there needs to be sort of agreement and a willingness to do that. And finally, coordinating an anti-corruption agenda at international forums. There needs to be meetings between EU, UK, US officials and other democratic allies and partners like Canada and Japan in order to advance this. Now, we've got a year of opportunity at the G7, the G20, the United Nations General Assembly is holding a special session on corruption, and there is President Biden's plan for a summit for democracy. And it would be a waste for us not to be coordinating on this. You know, and just to reiterate what I said earlier, you know, I don't think either as Europeans, either members of the European Union or not, we should be waiting for the Biden administration, which has got a lot on its plate, to tell us what to do. We should be actively proposing our own international strategy in order to fulfill collective aims on this.
Thank you, Ben. That's a really comprehensive and sort of excellent agenda for transatlantic relations. Scott, Raluca, would you care to kind of comment on some of the specific points that Ben raised? I'll let Scott go first, but then Raluca. And Raluca, I'd also kind of like to reemphasize and re-ask Ben's point on international economic tools, which the US has a number, but the EU is lacking somewhat, and maybe that's an area that is worth exploring at a policy level. Scott, over to you.
Thanks. I would say at the outset, I would love to talk sort of offline with both Ben and Lakshmi to hear your ideas in detail, because you've really piqued my interest in a number of things you've mentioned. If I could briefly respond, it is 35 days into the Biden administration, and the Treasury Department has one confirmed political official, which is Secretary Yellen. So I'm not going to preempt the administration's decisions, but I think, so I'm going to speak personally, but I think what I'm going to say is pretty well grounded in what you've heard to date from the President and others in the US. In terms of key partnerships, I think we are very eager to work more closely with Europe to combat corruption and combat illicit finance. In terms of AML standards, we generally think the FATF standards are appropriate, and they are the international standards. The question is, how do we ensure that they're more effectively implemented here across Europe at a high bar of effective implementation? And where are the easy parts of the world to more effectively implement them? How do we help the rest of the world to implement the existing standards as opposed to necessarily revising them? completely agree that we should elevate the role of combating corruption in terms of high-level government priorities. I think the White House and President Biden has been very vocal on that front. I'm very optimistic about the forthcoming summit democracies, and that's why I'm hoping offline I can speak more with my fellow speakers for some of their ideas. Also, I think we are very eager to collaborate with our European partners on the use of common authorities or designation, either identification tools, sharing information, and use of similar designation tools to call out human rights abuse and corrupt actors' abuse. And I think, as I noted at the beginning, we're very excited to see the new human rights authorities in Europe, and we'd be delighted if it could be expanded to cover corruption as well. On increasing information sharing, I think there's a lot we can do on that front. As it relates to Fatca and beneficial ownership data, I'm not going to comment on the specifics, but what I heard from Lakshmi and also Ben, the importance of beneficial ownership information, we completely agree. I think our department has been very vocal for the last 12 years of the big deficiency in the US has been our lack of a beneficial ownership regime, first for banks, and that was addressed 5 years ago, and for the government writ large. And it's, I think the former administration deserves a lot of credit. At the most senior levels, they're committed to getting a bipartisan agreement to pass the Aml Act, and they're able to do it. And it's on us. That is probably our biggest domestic priority, is implementing this new beneficial ownership obligation. And it's something we and FinCEN are very hard at work on, and we have a very short timetable. In terms of information sharing, I think for beneficial ownership information, for combating illicit finance or for tax purposes under Fatca or the CRS, I think that's something the larger Treasury Department is giving further thought to. And the fact that this information will be housed at FinCEN, again, domestically makes it much easier for it to be shared with law enforcement. In terms of harmonizing authorities on sort of what we would call CFIUS, basically foreign investment, that's something let me take back, and I'd like to talk further, Ben, with you on that, and also sort of others here. And last, two final things. In terms of combating kleptocracy more broadly, I would note that the AML Act of 2020, the beneficial ownership provisions have gotten the most attention because they're probably the most systemically important, and they're going to address our biggest gap. But it is a very lengthy bill of over 200 pages of provisions, including requiring Treasury to set up sort of a reward program for whistleblowers as it relates to kleptocracy. And we have a short time period to set that up. So that's something I think something we're also focused on, and we have every intent of making it work. And lastly, Ben, you mentioned citizenship by investment programs. Again, I'm not going to comment specifically on what the EU should do, but I think we're conscious of the fact that a number of jurisdictions there have CBI programs, and they have been misused by individuals to not only get European citizenship, but also misuse the international financial system, both in Europe and the United States, and they had no business getting citizenship based upon what is known about those individuals. So it's something we're also, I think, eager to work more closely with Europe on to close the deficiencies in those type of programs. It's this larger policy question, whether and how they can be effectively set up and mitigate those risks. That's a long answer, but
thank you.
Yes, 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 and yes is the answer.
Thank you, Scott. That was excellent. Raluca, would you care to comment?
Yes, I would start by increasing information sharing and BO. As you know, in our legislation, this is featuring high on the agenda. And as we spoke earlier, Lakshmi mentioned that you know, there are challenges. We will not beat around the bush about this. Our legislation in the Union, as it stands now in the directive, provides that member states establish BO registers. It was not an easy process, and then also the 5th Anti-Money Laundering Directive provides for the interconnection of these BO registers. Work is ongoing here. again, it's not a smooth process, and we are trying to also raise this, this matter as high as we can in international fora, because we think that in the end we should all live by the same standard, if I may. When it comes to corruption, I'm happy to take this back to colleagues in DG Home in the Commission who are dealing with this specific topic. But I would like to reiterate that there is a forthcoming strategy on organized crime to be adopted this year, and the key element there is that corruption is, the viewpoint in this strategy is that corruption is a key element of organized crime infiltration. But I will take this back to colleagues in DG Home, and Ben, I will pass on all the valid points that you have made, and you can take this up with her. A last point on golden visas and citizenship schemes. Here again, we were transparent about how we feel about this. You know that the Commission is publishing, pursuant to provisions in the Anti-Money Laundering Directive, supranational risk assessment every second year. The last one was published in 2019. It was part of the AML package of 2019. And there we pointed at citizenship schemes and golden visas as a vulnerability in the AML CFT defenses. And without entering now into too many details, the forthcoming package, AML package, will address this. So I would stop here, and again I will take the points back to colleagues in charge of the fight against corruption in the Commission.
Thanks, Raluca. And just to follow up, do you think that there's a case that Europe, as well as strengthening its own internal controls and access to its financial system, needs to take a more proactive approach in the international sphere, and with more proactive tools to tackle the international aspects of AML, sort of similar to, for example, the Patriot Act section 311, I believe? Or is this merely a matter of, well, not merely, but just a matter of strengthening our internal controls, and the rest, the international scene will take care of itself once our financial system can no longer be abused?
This is not an easy question, and I don't have a complete answer, because here again, it is the case that other services in the Commission are in charge of the sanction policy. But nevertheless, we here as well, I want to speak about what we already have in the AML CFT policy framework as it currently stands. We have a policy towards third countries, and here Scott is very well aware what we're looking at is to find more synergy with the Financial Action Task Force, because we cannot work in isolation, and for certain, as a fully fledged member of the FATF, the idea is not to duplicate work, but to find synergies with the FATF. This being said, we also have a duty in our legislation to make certain that the union financial system is not misused, and whenever we identify a threat posed by a third country jurisdiction, we have an obligation to list that country. This policy is also to be revised in the forthcoming package, not to make it more effective, not to weaken it at all. Again, synergy with FATF, we are very, this is something very close to what we want to achieve, and a more targeted approach when it comes to engagement with third countries.
Thank you, Raluca. We've only got around 10 minutes left. Lakshmi, I don't know if you wanted to comment on any of what you've just heard.
And I just wanted to bring up a point that we made earlier, because as I mentioned, these international measures are clear. They as much as they're about sort of curbing illicit finance or illicit financial flows, they are also equally a tool of foreign policy. And I think the US has had a lot of success, but there are also sort of, we've seen sort of grave concerns. As I've talked about, I think it's important to address in this conversation the fallout or the knock-on consequences of policymaking. And I think a big challenge in that is de-risking. And you can't talk about financial inclusion without talking about de-risking. You can't talk about the impact of these international actions without talking about the risks of de-risking. And as I think if you're looking into the future about what tools to use, I think it's also important to think through the negative consequences and do a negative impact assessment on what that is. And because I think we see two things happen. One is that there's this growing trend of de-risking all over the world. As I've mentioned, we today see a $1 trillion gap in trade finance, which simply means that there are now, because for the most of the world, the EU and the US financial system are critical to actual entry into the global financial system. Excluding or exclusion from it, even if it's done by domestic financial institutions as a result of profit maximization, has consequences, not just development consequences, but more significantly as illicit financial flow consequences, because that money moves and it moves through either shadow banking or the alternate system. We talk about cryptocurrencies very much as a present threat, and it's a threat that sometimes is used by governments that are a threat to sort of US or EU national security interests. But you've also seen sort of the fact that when there are international measures used, you have governments, like for example, the regime in Syria essentially is being supported by security interests that are rival to the US's own national security interests. And they've been able to do it even as sanction measures have gone on. Russia has started coming up with essentially its equivalent of a SWIFT, same as China. Now, these are very, very far away from actually being serious threats, but these are sort of results and consequences as countries and regimes try to grapple with how to deal with sanctions. And so I think as we talk about international measures, I think an important and critical part of it is to think about those negative consequences, because they have real world policy impacts, and we are seeing policies stem and emanate and change the illicit financial flow landscape. So I would urge us not to separate the two and to sort of think of them very much together as we talk about this.
Thank you, Lakshmi. Some really excellent points. We've only got a couple of minutes left, but I'll just turn to the rest of the participants to see if you want to comment on the points Lakshmi has just made about the negative consequences of de-risking and also for financial inclusivity around the world before we wrap up the panel. No? Oh, okay.
I'm happy to speak to it briefly. I think U.S. Treasury more broadly, well, including, I would say, the MLCT offices, recognize that financial inclusion and financial transparency are two key objectives of our department and U.S. government policy. I think you will note, for those of you who have not seen it, Secretary Yellen's first remarks that had any AML-CFT nexus were at this innovation roundtable in the last 2 weeks. I would encourage everyone to check them out. She spoke at length of financial inclusion and AML-CFT. De-risking is a very, very complicated issue. We have spent collectively, the US, our European partners, the FATA, the Financial Stability Board, have spent close to 2021, 6 or 7 years trying to better understand some of the drivers of it, the scale of it, and what have been the appropriate policy responses. And it depends upon what you're referring to. If you're referring to individual account losses, I think that's less of an issue. In Europe, there's a right to a bank account. In the US, there's not a right to a bank account, but most people don't have bank accounts. It's really for lack of money reasons versus AML-CFT. As it relates to MSBs or correspondent banking relationships, there certainly has been a concentration of relationships. There's both MSBs and respondent banks have less correspondent banking relationships than they used to. There's a whole host of factors driving that, including profit maximization and changes of business. AML-CFT does have something to do with that, but from a macro perspective, we understand from all the data that we have seen that the amount of flows going through regulated and transparent channels have only gone up since over the last 5 years. It's just through fewer relationships. So there's a concentration of where the money is going through, but still largely through regulated channels. And in addition, there's also, I think, a lot of attention being given to whether the misuse of AML CFT standards to deliberately seek to curtail the activities of civil society in a number of countries and using the FATF standards or domestic terrorist financing regimes as a way to limit the very legitimate activities of civil society. That's another thing I think we and other jurisdictions are following quite closely. So I think that certainly de-risking is something we pay a lot of attention to, and if we had more time, I'd regale you on what the FATF, the FSB, and the US has done over the last 6 years, but it's an ongoing concern is the short of it.
Thank you, Scott. As with everything else in AML, there's no easy answer, and it's a deeply complex picture. Unless any of Ben, did you want to say something?
No, but
oh, sorry, I saw you on mute.
So I'm muted to say thank you for to the fellow participants, really.
Yes, indeed. Thank you all. This has been a really fascinating and insightful discussion. And I think it's really shown that despite all the complex issues that we're dealing with, that policy in this area is really moving in the right direction and that there's a real momentum. And hopefully it can be kept up over the coming years to deliver some real tangible results. So thank you so much for sharing your insights with us and with the audience.
Thank you.
Thank you as well.
Thank you very much.
Thank you so much for inviting us. And as I said, I look forward to following up with all the panelists, maybe to speak further. We'd really love the opportunity.
Thank you.
Of course, we'll make sure to put you all in touch.